And now we're going to go and drill, baby, drill, and do all the things that we wanted to do and bring your costs down, your prices down, and make our country safe.
Trump has long said, drill, baby, drill. While he may make it easier for producers to extract more oil, it might not lead to more oil production in the United States. Already, the United States is the highest producer in the world, at over 13 million barrels a day. We're producing plenty of oil. The one kind of issue there is the oil that we produce here in the United States is not necessarily a fit for refiners. Refiners in the United States like that heavy, sour crude oil that's cheap, and the stuff we produce is light and sweet and works well with very simple refineries. The refineries in the United States are complex. They have a lot of equipment, and refiners have invested billions of dollars over the last 25 years to be able to take advantage of that difference in price between light crude oil and heavy crude oil.
President Trump has pledged to make it easier for U.S. companies to drill for oil in the name of energy independence. He also proposed adding 25% tariffs on Canadian and Mexican goods and 10% tariffs on energy imports, though he paused those tariffs at the beginning of February. While the U.S. already produces enough oil to meet its needs, it's not the right type of oil. Most U.S. refineries are built to process the type of sour crude oil found in Canada and Mexico, and not the United States, and turn it into products like the jet fuel and gasoline we use.
Anytime the price of a good goes up, you naturally use less of it. But also, if the suppliers are receiving a tax, that means they get less, and therefore they have less incentive to produce. What we're likely to see is if this continued for an elongated period of time, we will see the North American production of oil decline.
If the tariffs go through and they continue, and we're seeing the 2, 3, 4 months down the line, I think the biggest impact is on refiners in the Midwest of the United States. The Chicago area refineries process quite a bit of Canadian crude oil. BP has a Whiting refinery in Indiana, ExxonMobil at Joliet in Illinois, Flint Hills in Minnesota, private company, Citgo at Lamont, owned by the Venezuelans, but it's a US-based company. That's just 4 right there, but just about everyone in the Midwest at least runs some of that heavy Canadian crude oil.
2 U.S. refineries are already slated to close in 2025, the Lyondell refinery in Houston and the Phillips 66 refinery in the Los Angeles area. Experts say tariffs could cause more refineries to cut production or consider shutting down.
The way that we think is most attractive for our investors to play at this right now is we like buying Canadian oil producers. We like buying companies like Cenovus Energy, Strathcona, and then we own another company called Meg Energy. And we ultimately think that in North America, those are the producers that can grow production to meet the growing needs. And we think these producers are going to win massively off this because ultimately they're going to see higher prices even if they have to dwindle supply. And therefore, the returns on capital of their business are going to go up. The U.S. companies that can win off this is ultimately the producers here as well. Because if tighter supply drives pricing higher for West Texas Intermediate oil and also Western Canada Select oil, which obviously, if you get paid more on the same barrel of oil, you really don't change your capital investment overnight. And therefore, it just causes a lot of excess free cash flow to go to shareholders.
This isn't the first time President Trump crafted policies around what he calls an America First energy agenda. But experts say things are different this time around.
To go back to the prior drill, baby drill era was the 2010s, and that was really the first Trump administration. Back then, what you'll find is people were willing to supply the market at losses. American producers were losing free cash flow while they grew their production. The issue today is the American producers will not do that. I call them energy vigilantes because their shareholder bases are dominated by investors that if you raise your CapEx, they'll sell your stock off 5 to 10% that day. So I think the administration is dealing with a very different psychology in American production. The biggest losers that will be present if tariffs go through is ultimately the prices that get passed on to businesses and consumers.